students, how are you? I am your tutor, Abubakar Siddique, and today I am recording this video because we have a major change in financial reporting and strategic business reporting paper, SBR. And this change is regarding the presentation and disclosures of financial statements. Dear students, we used to prepare financial statement according to IAS 7. IAS 7 was the accounting standard which we use or which we follow to prepare the individual company financial statement and for consolidated financial statement. But now the news is, now we have a new standard in town. I mean to say the IAS 1, the old accounting standard regarding the presentation of financial statement has been replaced by IFRS 18 in ACCA. So that means now all the exams of FR and SBR would be tested according to IFRS 18 for the preparation of the financial statement. We will not follow anymore IAS 1. The purpose of this video recording is that we should discuss that what are the major impact on our paper regarding this change. So let me give you a brief background. When we prepare financial statements, basically we have to prepare profit and loss account and other comprehensive income, statement of change in equity, statement of financial position. It includes the cash flow statement. It includes the related disclosure and notes. So these are the components of the financial statement. Now, by applying IFRS 18, the major change which is going to affect our preparation of the financial statement is basically regarding the preparation of the profit and loss account and other comprehensive income. Statement of financial position, statement of change in equity, cash flow statement, notes to the account. There is no major impact or there is no major change which would affect our exam, but the changes in the format of the profit and loss account especially, are significant, which we need to discuss here. So that is the objective, and we are going to discuss the major changes and how those changes are going to affect our preparation of financial reporting and strategic business reporting paper. So let me share you the format of the new set of profit and loss account. Now, dear students, in a new IFRS 18, the profit and loss account, first of all, the profit and loss account has been categorized into five categories. The first category is an operating activity, or you can say operating category. Then we have investment category. Then we have financing activity or financing category. Then we have a category on taxation. And after that, the last category we have a discontinued operation category, a discontinued operation activity. So in a new set of profit and loss account, in a new standard, when we are going to prepare profit and loss account, we have to categorize the profit and loss account or items of profit and loss account in these 5 categories: operating, investment, financing, taxation, and discontinued operations. These categories we were used to apply in a previous set of financial statement as well, but we do not use explicitly the categorization. But obviously, when we prepare the financial statement, profit and loss account in IS1, obviously we take care of these things. But in now new in accounting standard in IFRS 18, we have to express it explicitly that which income and expenses are in operating, which income and expenses we are recording in investment, which income and expenses we are recording in financing and tax and discontinued operation category. So we have to categorize the profit and loss account in these 5 categories. So as you can see on your screen, the set of the profit and loss account. So we have the profit and loss account and other comprehensive income for ABC Limited for the year ended 31st December 2024 and comparative information. When we prepare the financial statement, we have to prepare the comparative information as well. So 2023 in this format is the comparative information. So the first category we have in a profit and loss account is known as operating activity. And we are focusing on our operating activity by function. In this profit and loss account, the operating activity which I am presenting is based on the operating activity by function. By function means we categorize the operating activity by function in cost of sales, selling and expenses, admin and distribution. These categorization within operating activity is known as categorization by function. So in operating activity, as you can see, that all income and expenses that we are not categorizing in other 4 categories means the income and expenses which are not relating to investment, not relating to financing, not relating to taxation, not relating to discontinued operation will be accounted for within the operating activity. It includes revenues. It includes the expenses relating to cost of sale with expenses relating to normal trading activities. That means cost of sale. That means selling and distribution expenditures. That means admin expenditures. That means depreciations on property, plant and equipment, research and development activities, which we talk about in IAS 38, impairment losses, and gain and losses on the disposal of property, plant and equipment. These expenses are categorized, or these revenues are categorized within the operating category of profit and loss account. So now IFRS 18 wants us to categorize the income and expenses clearly in 5 categories. And the first category is the operating category, which we have talked about. When we have recorded all the operating activity, revenues, cost of sale, all other operating income, selling expenses, research and development expenses, general and administrative expenses, goodwill impairment, other operating expenses like gain or loss on a disposal or impairment losses on property, plant, equipment, depreciation, we will be having a subtotal which is known as operating profit. Now you can relate this format with the cash flow statement. In cash flow statement, we also have such activities. So you can see what now IFRS 18 wants to compare this profit and loss account with cash flow statement. So they are creating a comparability between profit and loss and cash flow statement with regarding to the categorization of the activity. After completing the operating activity, the second activity which we will be having will be known as investment activity, which is known as investment activity. Investment activity. In investment activity, we will be having incomes and expenses, gain and losses, which are relating to investment decisions, like share of associate profits, like in gain or losses on a financial assets, categorized at fair value through profit and loss account, dividend incomes, interest incomes. These items will be presented within the investment activity. Dividend income, interest income, share of profit from associate, dividend income, fair value gain and losses on a financial asset, categorized at fair value through profit and loss account. And the transaction cost on the financial assets, which are classified at fair value through profit and loss account, that transaction cost will also reported in investment activity. So when we done with the investment activity, the subtotal which we will get now will be known as profit before financing and income taxes. Now, after doing the investment activity, the second category is the financing activity. Now, financing activity means the activities relating to loan financing. Loan, when I say the loan financing, it includes the lease financing as well. So any interest expense on a loan, on a bank borrowings, on a loan notes, on debentures, or any interest expense on a lease liability, interest expense on a provision, on a unwinding of the provision. When we have to record a provision for with a material time value for money, we discount the provision and then we unwind it. So the unwinding will also reported in the financing activity. So interest expense on a bank loan, interest expense on a loan note, interest expense on a debenture, interest expense on a redeemable preference share, interest expense or a finance cost on a lease liability, financing cost of the unwinding of the provision. All such expenses will be reported in the financing activity of the profit and loss account. And we will get the other subtotal, which is known as profit before income taxes. And after that, we have a tax category. In tax category, we will report the current tax expense and deferred tax expense. Any movement in a current tax and deferred tax expense will be reported in a tax category. Current tax include current tax expense or current tax income. Deferred tax expense include deferred tax expense and deferred tax income. So any aspect relating to current taxation and deferred taxation will be reported in a tax category. And after adjusting the tax, we will get a profit from continuing operation. That would be the next subtotal. Profit from continuing operation. That means all the things we were talking about above are relating to the continued operation. And then the last thing we will disclose, that would be the profit or loss from the discontinued operation. That will be reported and you will have a net profit. You will have a net profit, final subtotal of the profit and loss account. So these are the main changes due to IFRS 18, and the main changes will be in the presentation of the profit and loss account on. Other statements would remain the same. Financial position, statement of change in equity, even the other comprehensive income. But the major changes are in profit and loss account. Then after the profit, we will be having the other comprehensive income. In other comprehensive income, we have some income and expenses which are not reclassified to profit and loss account. That category is presented separately in other comprehensive income. That include revaluation gain on property, plant and equipment. That include the remeasurement gain or losses on an investment equity instrument, which are measured at fair value through other comprehensive income, remeasurement gain or loss on a defined benefit plan. And the income tax relating to those categories will be presented in other comprehensive income category of items not reclassified to profit and loss account. Then the other item we have in other comprehensive income, the gain or losses which may be or will be reclassified to profit and loss account on the occurrence of a specific event. For example, if we have a financial asset investment in that classified at fair value through other comprehensive income. Now, if we have investment in that classified at fair value through other comprehensive income on the disposal of such financial asset, any gain or losses reported in OCI are reclassified to profit and loss account. Similarly, in case of hedge accounting, in some scenarios, the gain or losses which we have reported in OCI are reclassified to profit and loss account. So that would be the presentation of profit and loss and other comprehensive income. Yes, previously, as we have the option in IAS 1 that we can prepare the profit and loss account separately and other comprehensive income separately, that would be still available. Or we can prepare the combined statement, profit and loss and OCI, that is also available in IFRS 18. Now, these are the main changes which we are going to face in the preparation of the profit and loss account and other comprehensive income. And as I told you, the other balance sheet, financial position, statement of change in equity would remain the same. Now, what would be the impact on our exam? It is very clear it would impact our, in FR, if we talk about the financial reporting, it is going to impact the preparation of the profit and loss account in a final account. So now we will prepare the profit and loss account, or we will present the financial statement according to IFRS 18. And it will also affect the consolidated profit and loss account and other comprehensive income in both FR and SBR strategic business reporting. So that would be the effect on our exam. And for our coming attempt for June 2025, we will be doing a lot of questions on final account, on consolidated financial statement in FR, and in SBR. As you know, we will be given a pre-populated spreadsheet with regard to the consolidated financial statement. We will be doing questions according to the new changes which we have now in IFRS 18. So this is the information, that is the new update which I want to share with you guys, and hopefully you will be having enough sufficient information regarding the change. And don't worry, we are here and we will be doing the questions as per the new changes. Okay, so goodbye and take care. Goodbye. Thank you very much.